Hello and good morning everyone. So today is the first trading session of this week. So let's get started with today's top stocks and news. The first one is Tata Motors. The company has reported its Q2 numbers where it experienced a Y-on-Y decline in its net profit which fell 11.2% to 3,343 crores from earlier 3,764 crores. Basically this was impacted by 3.8% drop in the revenue. Now it is at 1.01 lakh crore against 1.05 lakh crore previous year and the below market expectations as well. EBITDA also declined by 19% on Y-on-Y basis and the lower margins of 12% versus 13.1% last year as the company faced cost pressure as well as saw modest demand slowdown. The company's Jaguar Land Rover, which means JLR unit, was impacted by temporary supply constraints including issue with aluminium sourcing, which contributed to a 90 basis point drop in EBIT margin, now at 5.1%. If we talk about the PBT, which means profit before tax, also fell 10% Y-on-Y basis. Now, JLR stated that it expects production and the wholesale volume to recover in the second half of the year, holding on to its fiscal year 25 guidance for revenue of 30 billion euros and EBIT margin or at above 8.5%. Also, the management highlighted the cautious outlook for near-term domestic demand but expect improved performance across the division in the second half of fiscal year 25. Notably, Tata Motors aim to become net debt-free by the end of the year, reflecting a focus on the financial health of the company. Now, the second stock which you need to keep on your radar is Asian Paints, because the paint industry giant faced significant challenges with net profit declining by 44% to 694 crore versus 1,091 crore previous year. Revenue decreased by 5.3% Y-on-Y basis. EBITDA also dropped by 28%. Now the company margin fell to 15.4% from 20.2% last year, basically driven by softer than expected demand in the domestic market and higher input cost. Management expressed confidence in a margin recovery as raw material prices are expected to soften and recent price hike taken the effect. The next stock which you need to look at is Divi's Lab. In contrast, Divi's Lab posted strong growth with net profit up by 46.5% Y-on-Y basis. Revenues also up by 22.5% on Y-on-Y basis. Basically, this growth was fueled by strong demand for the company's API and the other pharmaceutical products. EBITDA jumped 49.5% Y-on-Y basis, leading to an improved margin of 30.6% versus last year 25%. Now, company surpassed market expectation across all key metrics, reinforcing its position as a high-growth player in the pharma sector. The next stock which you need to look at is RT Industry. The specialty chemical firm saw net profit drop by 43% despite revenue growing by 12% Y-on-Y basis. EBITDA also declined by 15.5%, with margin shrinking to 12.1% from 16%. Basically, the decline was primarily due to softer performance in their energy business, which saw a volume drop 1% and 36% sequentially due to the falling remaining margins and the challenges basically in the gasoline net pharma market. RT Industry remains optimistic about the future, projecting EBITDA for fiscal year 25 between 1,050 and 1,100 crore while lowering their capex guidance due to the market condition. The next stock which you need to look at is Metropolis Healthcare, because the diagnostic chain posted 31% increase in their net profit by basis. Basically, they are reaching at around 46.5 crore. Revenue rose by 13.4%, which is basically driven by 7% increase in the patient volume as well as the strong growth in the B2C revenue, which is up by 21%. EBITDA also grew by 20.2% Y-on-Y basis and margins are at 25.7%. The company cited basically improved demand for its service and sees further growth potential in the diagnostic sector as the demand normalized post-pandemic. In the Q2, Ola Electric reduced its net loss to 495 crore from 525 crore Y-on-Y basis. Revenue surged 39% and which is reported at 1,214 crore, reflecting basically a strong demand growth in the EV market. Ola is also narrowed its EBITDA loss to 349 crore, down from 435 crore last year, as it continues its drive toward the profitability. The next stock is LIC because it showed the complete strong performance this quarter. The total API, which means annualized premium equivalent, is up by 26% Y&Y. Basic also beating the estimates. Retail APE grew by 31%. The VNB of the company surged 47% on Y&Y basis, while the VNB margin improved to 18% from 15.3% last year, which is directly indicating profitability gains from new business. The next stock which you need to look at is JSW Steel because the company has declared the preferred bidder for the Banai and the Bhalumuda coal block in the Mand-Raigarh. The another stock which you need to keep on your radar is Biocon because it has received a Voluntary Action Initiated, which means FAEI classification from the USFDA for its park site in the Bengaluru. The next stock is DCX System because it has secured a significant order worth 460 crores from Lockheed Martin Global, highlighting its expansion in the defense technology. So these were some of the stock which you need to look at in today's trading session. Thank you. Bye-bye.